Hello everyone, today I will be your hostess for our live video. So Peter, the FX market seemed to have been a bit quiet yesterday.
Yeah, actually it was quiet over the past 24 hours. Everybody expected a higher volatility as the week was about to begin. That didn't happen. We had a US dollar which moved a little bit lower, yet overall there was a sideways movement. There were no extreme outliers, so mostly every other currency aligned to the US dollar. We expect that volatility could remain low given that the summer months are approaching. So overall, I wouldn't expect much yet. Financial releases as well as monetary policy events could generate some interest among traders and increase the volatility.
Okay, how about US stock markets?
US stock markets took everybody by surprise. There was an expectation, or at least a question, whether US stock markets would continue the rebound which had started last week. That did not happen. Actually, US stock markets stabilized. It was characteristic how all three main US stock market indexes, Dow Jones, S&P 500, and NASDAQ, tended to remain rather stable. So we could say that there is a US stock market overall, and the effort to catch some ground, to regain some ground, some slight degree of optimism seems to be sizzling out. I would dare to say more or less that we may see stock markets maintaining that sideways movement, at least initially. We'll have to wait and see for the US session to restart today in the afternoon and see more conclusively where US stock markets are heading to.
Mm-hmm. And how is gold's price behaving?
Gold's price yesterday opened with a positive gap. Gold traders were not able to actually benefit from the advantage given at the open. I would dare to say that they even dropped a bit. We may see a negative correlation with the US dollar, yet overall gold seems to be reflecting also the inactivity of the US dollar. At the same time, we have to note that the possibility of the G7 meeting actually deciding sanctions on imports of Russian gold and the prospect of a tighter supply for the precious metal did not seem to impress traders that much. So more or less, I would dare to say that for the time being, gold's price seems to remain also a little bit inactive.
Okay, how are oil prices moving on the commodities front?
Oil prices were on the rise, remained on the rise. I would be highlighting today for oil traders the release of the AP weekly crude oil inventories figure from the US. Should there be a considerable drawdown, we may see oil prices getting some support and vice versa, as that would imply practically a tightening of the US oil market.
And what's in the calendar today?
Well, we have France's consumer confidence is expected to drop a little bit lower. It's important because France is the second largest economy in the Eurozone, and a possible pessimism among consumers in France could slow down the retail sales growth rate for June, which more or less could slow down also the GDP recovery. So that could be somewhat important for the euro as a currency as such. The second indicator to take notice of would be the US consumer confidence, which is expected to drop even more widely. And once again, should the US consumer confidence indicator drop, that would imply practically less optimism on behalf of US consumers, the average US consumer, which may prevent him from actually buying more and consuming more. Thus, once again, we may see an adverse effect on the retail sales growth rate as well, and consecutively on the GDP rate as well. I would be highlighting also Japan's retail sales. They are due out tomorrow during the Asian session. They don't tend to make much of a market volatility for JPY, but macroeconomically they will be important to take notice of.
Mm-hmm. How about the monetary front?
We forgot about that. Yes, on the monetary front we have some interesting events. We make a start with ECB's forum about central banking. It starts today, so we're going to be having as key speakers ECB President Christine Lagarde, which is going to be making the introductory speech. And we would also note the speech of ECB board member Isabel Schnabel, which is more or less about to talk also about inflation. I would dare to say that we may see both speakers reiterating the need for a 25 basis points rate hike in the July meeting of ECB, while a second one may be following, albeit it's not known the width of the rate hike as such. It may be a 25 basis points rate hike, it may be a 50 basis points rate hike. So we will have to wait and see here. On the fundamental level, I would also note the G7 meeting. Now, the G7 meeting is about to end today, and the leaders are about to discuss and decide whether there's going to be a cap on Russian oil, on prices of Russian oil, and also they're going to be deciding whether there will be an actual ban of imports of Russian gold.
Okay, that's all for today. Thank you for today's live session with Peter.
Hello everybody, welcome to the technical analysis part of the presentation today. As always, we make a start with the US dollar, and this is the USD index for our chart. Note how the price action has remained largely sideways, albeit we have to note that there are some bearish tendencies for the index, very slight ones, but still present, as it's slowly but steadily seems to be approaching the 103.20 support line. Also, note that the RSI index is below the reading of 50. Actually, right now it's at 42, which may also remind us of the presence of the bears around the neighborhood. So any bearish should not be underestimated, or the possibility of bearish tendencies should not be underestimated traders for the US dollar index. I would note, though, how interestingly enough, the price action dropped, yet found some support in the lower Bollinger Band, which, by the way, the lower Bollinger Bands are pretty narrow, once again indicative of the low volatility for the dollar. We tend to maintain a bias for a sideways motion, and for it to change in favor of a bearish outlook, we would require a definitely clear breaking of the 103.20 support, which provided support here and here, support here once again. So it was tested multiple times, actually 1, 3, 4 times. And traders tend to take notice of it. So for us to switch our sideways bias in favor of a bearish outlook, we would require once again the clear breaking of the S1, the 103.20, and for the price action to start actively for the 101.30. On the flip side, should the bulls take over, we would expect the price action to rise, break the 105.55, and start aiming for the 107.50. For the time being, though, our base scenario remains that the price action of the USD index is to remain flat on a sideways motion. Probably, though, I wouldn't say probably, but still bearish tendencies are possible given that the RSI indicator is below the reading of 50 and slowly descending. Let's have a look now at Euro USD. There you go. Euro USD on the rise, testing the 1.06. Actually, this could go. Let's have a look at 1.0620. Let's have a look at it. but this could be better. What's this? 1.060705. You have one touch, aimed for, touch, touch, touch. Let's switch it. 5 pips up. Not much, I know, but feel more comfortable with it. So, the price action of Euro USD has risen, but seems to be respecting the 1.0605 resistance line. So, for the time being, we are seeing a weakness on behalf of the bulls to actually break above the 1.0605 and start to actively aim for the 1.0755. Overall, we tend to maintain a bias for a sideways movement, probably tightly range bound, just below the 1.0605 for the time being. Now, for us to switch our bias for sideways movement in favor of a bullish outlook, we would require a clear breaking of the 1.0605 and for the price action to break above it and start to actively aiming 1.0755, which would be practical or providing more evidence about a possible upward trend line. Let's readjust this. Come on. Here. A little bit. That's it. So, for the time being, once again, we tend to maintain a bias for a sideways motion, which should break the upward trend line, which I have just formed. I would dare to note also that the RSI indicator is above the reading of 50, implying some slight bullish tendencies. But for us to switch our bias for a sideways movement in favor of a bullish outlook, we would require clear breaking of the 1.0605 and for the price action to start actively aiming for the 1.0755. On the flip side, a possible breaking of the upward trend line as shown a few minutes ago would be practical reassurance of the sideways motion of the pair, and for us to switch the bias of a sideways motion in favor of a bearish outlook, we would require a clear breaking of the upward trend line, the price action to clearly break also the 1.0480 and start aiming for the 1.0355. Note how the levels were reaffirmed. The S2 was aimed for here, tested here, while the S1 was tested once, twice, as a resistance line 3 times, and here 4. The first resistance line, the 1.0605, was tested once, twice in the past 24 hours. So there are some efforts to actually break above it. But the fact that the shadow here is higher than the last one tends to put the way the scale more towards the sideways movement. Nevertheless, 1.0605 should be taken notice of as it was tested once, twice, 3 times, aimed for here, retested here. So it was tested 4 times clearly as a resistance line and held, while it was also tested another time here. And that, and should the R1 be broken, we may see the price action start to actively aiming for the 1.0755, which was tested resistance, aimed for here and here. It's quite interesting to see how this movement is going to be going. Let's have a look at cable. Cable has been on a sideways movement also, even without the bullish tendencies. In contrast to the euro, which the bulls have been in cable, that's not the case. Cable seems to maintain a clear easygoing sideways movement between the 1.2325 and the 1.2175, albeit the price action over the past 24 hours has been pretty narrow. Note how the RSI indicator is practically running along the reading of 50, implying a rather indecisive market. Should the market display practically a selling interest, we may see the price action breaking the 1.2175, which provided support once, twice, 3 times in the past 4, 5, 6, and start to actively aim for the 1.2070. Should the S2 be broken, which we don't think that's probable, and the pair, should it actively, or if you prefer in an extreme bearish scenario, may start aiming for the 1.1935, which was tested here. On the flip side, and should the pair find extensive buying orders along its path, we may see the price action breaking the 1.2325, which was extensively tested in the past week, and start aiming for the 1.2470, which used to be a support line, once, twice, 3 times. While in an extreme bullish scenario, we may see the pressure starting to aim for the 1.2660, which is also the highest level in our chart right now. For the time being, once again, we tend to maintain a bias for a sideways movement, and the fact that the RSI indicator is running along the reading of 50, while the price action shows little volatility. It's characteristic how narrow the Bollinger Bands are and how the price action is actually moving just above the 20 moving average, which is the midline of the Bollinger Bands. And both of these indicators practically are signaling the possibility of a sideways movement. Let's have a look now at USD/JPY. The USD/JPY, which has broken above the 135.60. Let's change this and make it into a support line. Okay, let's go hunting. Let's go hunting for another resistance line, albeit in my opinion there should be none, because USD/JPY is already at very high levels. Let's look at the monthly chart, and there is none. Yep. Weekly chart. Let's readjust. Nope. Daily. Neither. For our chart. Let's widen this, readjust it. 140. That's as high as we expected to go. Why? Because that would be the upper limit, in our opinion, about the possible intervention of BOJ. $140. The R2 is going to be now the 138.50. First resistance line, which is also the peak which we have in our charts, is the 136.75. Lower than that, we note the first support line, which is the 135.80. Note that it was a prior resistance line, and as it has been broken, it turns from resistance into a support line. Excuse me. Placing now the second support line at 134, which provided support here. Third resistance line being placed at 133. And I would be placing a fourth resistance line here. And that would be the 131.50. And now let me explain what I have done here. So what we see here is that USD JPY seems to be trying to escape the past sideways movement. There are some slight bullish tendencies here. It's characteristic that the upward move of the pair, which should be clear on the 1-hour chart, see how the pair actually forms higher troughs and higher peaks. So that seems to be an upward movement, which should not be underestimated. And please note that USD JPY is rising despite the dollar index actually dropping. And that would imply a greater degree of weakness on behalf of Japanese yen. So practically, it would seem, and we could verify it, that JPY for the time being is of the FX market, of the majors at least. I would say that I'm pretty doubtful whether the upward movement has much to go on two reasons. A, the first reason is that the section has already reached the upper Bollinger Band, which, by the way, the Bollinger Band narrowed, indicative of the low volatility for the pair. On the other hand, I would highlight the fact that the next resistance line is the 136.75, which is a 24-year high. And that could practically cause, actually that should be 70. Let's have a look, another look. Yeah, sorry, 70. 136.70. There you go. So practically that would be causing the bulls to hesitate at least. Also, I'm worried that we are entering an area of USD JPY rate where market intervention on behalf of BOJ would be possible. And the possibilities of an intervention would rise should the pair rise above 136.70 in my opinion. Actually aiming for the 138.50. As long as the price action in this case continues to rise, the chances of the bank actually intervening in the market rise with it. On the flip side, should the bears take over, we may see the price action of USD JPY actually breaking the 135.80 and start to actively aim, if not even break, the 134. However, for that to happen, we would expect, mind you, the RSI indicator also to drop, break below the reading of 50 and start to actively aim for the reading of 30. That would be calling in the bears. And given that the pair is practically aiming, I wouldn't say aiming, trading at 24-year highs, that would be, in my opinion, more of a reason for the price action on technical level to start correcting lower. That's why I placed the fourth support line. Sorry, let me correct it. Yeah. Okay. Once again, bullish tendencies seem to be present, but on the other hand, before we go to the but, bullish tendencies seem to be present. They are supported by rising RSI. On the other hand, though, the price action has reached the upper Bollinger Band, which may more or less slow down or even reverse the upward motion. Let's have a look now at USD CAD. Oh, still dropping, hey, are we? Oh, yeah. Excuse me. Let's change that into red. Let's also draw the new downward trend line. Could be a little bit wider. Let's readjust the labels just a bit. The second resistance line being placed at 1.2970. First resistance line now being placed at 1.2865. First support line now being placed at 1.2760. Second support line being placed at 1.2630. And the final support line, which is the lowest level of our chart, would be placed at 1.2520. Sorry, let me adjust that. 500. So there you have it. We have a nice, clear downward movement on behalf of USD CAD, which could be a result practically of a slight weakening of the US dollar, yet at the same time a strengthening of the Canadian dollar. The price action has broken the 1.2865 support line, now turned to resistance. We tend to maintain a bearish outlook for the pair as long as it remains below the downward trend line, which was incepted practically on the 23rd of June. This one. Now, should the bears, before we go there, I would like to note how the price action bounced practically on the lower Bollinger Band and did it again just now. Also note that the RSI indicator is at the reading of 30, just above it, actually at 32. Let me have a look. Yeah, 32 around, which more or less confirms the bear. However, should the RSI indicator break clearly below the reading of 30, that would be signaling that the pair has reached or is about to reach oversold levels and would be ripe for correction higher. So on the one hand, we have the RSI indicator, which tends to support the bearish sentiment. On the flip side, we note that the price action on its way down has hit the lower Bollinger Band, which may slow down the downward movement. Nevertheless, the downward, or if you prefer the bearish outlook, seems to remain present, and should the bears actually remain in charge, I wouldn't be surprised to see USD CAD breaking the 1.2760 and start aiming for lower grounds, possibly for the 1.2630. I know the spaces are pretty wide, but don't forget that the CAD is a commodity currency and could create higher volatility. Also note that on a fundamental level, the CAD's price could gain further, USD CAD could drop further as CAD strengthening could be enhanced by, I would dare to say, higher oil prices. On a technical level, I would be highlighting the drop of the lower Bollinger Band and practically the 20 moving average as well. We're about to meet the 50 moving average, the 100 moving average and the 200 moving average. What I would like to do now is to switch and make this a 50 moving average. Yeah, that's clearer. Note how the two moving averages are converging. About to cross. It's going to be interesting to see whether that's going to be an actual cross or not. Let's have a look now at the Aussie. AUD/USD has been rising, yet not with the same intensity as the Canadian dollar. So the Canadian dollar is getting additional support, probably from rising oil prices. I'm going to keep this as a resistance line. 0.6620. The price action is exactly at the 0.6950. It has tested it and retreating once again below it. Possibly. Should it drop below the 0.6950, that would be a confirmation of the validity of the first resistance line. And that would practically reinforce our bias for a sideways motion after the pair broke the downward trend line, which had started to form around the 16th of June and had lasted up until the 24th of June. Should, on the other hand, the price action rise and clearly put some distance between itself and the 0.6950 level, that could be an indication that the bulls, however, I would require clear breaking of the 0.6950 resistance line and for the price action to actively start at 0.7035. A break below the 0.6950, somewhere in this area, would be signaling a continuance of the sideways motion, while a break of the 0.6850 and an active aiming of the 0.6730 support line would be signaling that the bears have taken over and the pair is moving in a downward motion. Also a very interesting chart. Okay. Note how the price action practically bounced on the upper Bollinger Band here. Pretty interesting. Let's have a look at USD/CHF. USD/CHF, which has broken, USD/CHF has been moving in a downward motion. Note how clear the downward motion is of the US dollar against safe haven CHF. In contrast, let's have a second look at USD/JPY, which has some bullish tendencies but still is not convincing. On the contrary, CHF has a clear downward movement. It's characteristic that the 0.550 has been broken. I wouldn't be so certain that it will last. That's a question which we will have to see the answer for in the American session probably. For the time being, though, we turn this support line into a resistance line as the price has broken it to the downside. I would be noting though daily one test, second test, third, fourth, fifth. That's good. We're keeping, and this would be the in green, please. Dark green even. 0.9290. New final support line. Readjust the levels. Drilling down to the 4-hour chart. $0.9290, $0.9370, $0.9455, $0.9550, $0.9640, $0.9765. There's a new setup here. Now, this price action has been moving downwards. It has broken the 0.9550 support line, now turned to resistance. We tend to maintain a bearish outlook for USD-CHF. Note this is the 4-hour chart. As long as the price action remains below the downward trend line. Also note that the RSI indicator is actually now at the reading of 36, which could also concur that the bears are in the neighborhood here. On the other hand, it seems to still have some space to move lower, given that the lower Bollinger Band is even lower. So there is some space here for the bears to move around, but not much, just a bit. And should the bears actually remain in control, I would expect the price action to start aiming for the 0.9455 support line and placing more and more distance between itself, the price action as such, and the 95.50 resistance line. On the flip side, should the stabilization take place, we may see the price action starting to revolve around the 0.9550, and the first signal would be the breaking of the downward trend line. Should the bulls take over? Now, for bullish outlook, we would require a clear breaking of the 95.50, a clear breaking of the pre-mentioned downward trend line, a breaking also of the 0.9640, and for the price action to start aiming for the 0.9765. Should the pair, that's another possibility, we may see the pricing just a bit, breaking the 95.50, breaking the pre-mentioned line, and stabilizing in the area between the 96.40 and the 95.55. Sorry, 0.9550. For the time being, though, kind reminder, we tend to maintain a bearish outlook as long as the price action remains below the downward trend line. Okay, let's have a look at TRY and whether USD TRY has settled. And it seems it did. This is the 4-hour chart. There are some even bullish tendencies here for USD TRY. It seems to be correcting a little bit higher on the daily chart. Okay. For the time being, a stabilization seems to be taking place. Let's readjust the levels a little bit. Let's narrow this down. Let's have a second look at the third resistance line once again. Yep, nothing much. Readjusting, drilling down from the monthly chart to the 4-hour chart. This would be the 1744.70. Really, that was the highest level in the chart? Oh, this is the highest level. So the 1832 actually stands. Okay, that's interesting. And the first line now is being placed at 16.8540. The first support line remains the 1640. The second support line, definitely here, remains the 15.74, and the third support line at 15.20. So for the time being, we tend to switch any bearish outlooks in favor of a bias for a sideways movement, initially between the 1685.40 and the 16.40. So we're talking about once again a rather sideways movement. Note how the RSI indicator is slowly distancing itself from the reading of 30, aiming for the reading of 50. Another indication that the sideways movement may continue. However, some bullish tendencies could take over, or at least the bearish tendencies may start losing steam here. Should the bears regain control, we would expect a clear breaking of the 16.40 and for price action to actively start aiming for the 15.74. On the flip side, should the bulls take over, we may see the price action breaking the 16.8540 and aim or reach, even maybe even breach, but I would expect a stabilization due to the pair's past sideways movement at this level, just below the 17.4470. Interesting chart. Let's have a look now at NZD-USD. Kiwi still in sideways motion despite testing the 0.6962.90. So USD NZD in the 4-hour chart, we see some bearish tendencies as the price action tests the 0.6290. However, the RSI indicator is close to the reading of 50. I'm not convinced by this break. I would require clear breaking of the 0.6290, the price action to reach somewhere here and start actively aiming for the 0.6215, which provided support here and here, before switching my outlook in favor of a bias for a bearish outlook. By the way, this line is no longer needed. To the upside, and should the bulls take over, we may see the price action reversing course, breaking definitely the 0.6365, which provided resistance here, here, and here, and start to actively aim for 0.6418. Let's have a look at gold's price. Gold's downward movement seems to be reaffirmed since yesterday. Yep, it moved decisively lower. It stabilized somewhere here. I would maintain a bearish outlook as long as the price action remains below the downward trend line. The RSI indicator is just below the reading of 50, implying some stabilization. Let me readjust the levels once again. There you go. So should the bears maintain control, we may see the price action aiming, if not breaching, the 1807 to the upside. And should the bulls take over, we would expect the price action to rise, clearly break the 1836, clearly break also the downward trend line, and start actively aiming for the 1870 resistance. Let's have a look now also at WTI prices. And WTI prices have moved decisively higher. What's this, by the way? Let's delete this. Now we're placing another resistance line here. 106.30 in red. Now it's pretty narrow, but I could not neglect and this and this and this. It seems that traders are keeping an eye out 16.30. Let me readjust the labels. In green. So we tend to maintain an upward bias, or if you prefer, bullish outlook for the commodities price, as long as it remains above the upward trend line. Sorry about that. 116.3, 113.80, 110.85, 107.55, 105.10, and 101.25. Well, WTI's price has moved higher, breaking the 107.55 resistance line, now turned to support. We maintain a bullish outlook for the commodities price as long as the price action remains above the upward trend line. Note also the RSI indicator, which is clearly above the reading of 50 and aiming for the reading of 70, also implying some bullish tendencies. The rise, though, may be slowed down as the price action has reached the upper Bollinger Band. And note how the price action practically is about to reach also a convergence point of the 100 and the 200 moving averages. Beautiful chart. Should the bulls maintain control, we would expect the price action to break the 110.85 and start to actively aim for the 113.80. On the flip side, should the bears take over, we would expect the price action to reverse direction as a first sign of a trend reversal. We would expect the breaking of the upward trend line, the breaking of the 107.55, and for the commodities price to start actively aiming for the 105.10. Once again, a beautiful chart here, people. So that should sum it up. Thank you very much for watching. From all of us here at IronFX, best wishes for solid trading.
Forex, also referred to as foreign exchange or FX, is the process of exchanging one currency for another for various reasons, including commerce, tourism, or trading. In other words, there is a network of buyers and sellers that transfer currency, or convert one currency into another, at an agreed price. Participants of the market use forex to hedge against interest rate and exchange risk, to diversify their trading portfolio and to speculate on the prices of currencies depending on financial releases or geopolitical events. Currencies are traded in pairs. A currency pair refers to the quotation between two currencies through which the value of one currency is being quoted against the value of the one other. The first listed currency is also known as base currency, while the second currency is called quote currency. Forex involves selling one currency to buy the other. The price of the currency pair shows how much of the quote currency is needed to buy one unit of the base currency. The euro-USD is an example of a currency pair which indicates that the euro is traded against the US dollar. The foreign exchange market is a global decentralized marketplace where currency traded occurs over the counter via computer networks among traders around the globe instead of one central location. Trading, commerce, and finance in general have a worldwide reach. Therefore, the forex market is considered the largest and most liquid market worldwide. In fact, based on a Bank of International Settlements report, there is a daily forex trading volume of 6.6 trillion as of April 2019. The market is open 24 hours per day, 5.5 days per week, and trading occurs across every time zone in the biggest financial centers of Zurich, Tokyo, Sydney, Singapore, New York, Paris, London, Frankfurt, and Hong Kong. This makes it an extremely active market, as there is always someone willing to buy or sell at any time while prices continuously change. Although currency conversion is usually done for practical purposes, like traveling abroad, the majority of foreign exchange is executed by traders with the purpose of potentially generating some revenue. Since there is a big amount of currency converted daily, the prices of some currencies can fluctuate significantly. Traders are attracted to the forex market because of this volatility, as there are possibilities for higher profits. However, there is also increased risk as well.
Hello everyone, my name is Emily and welcome to our trading tips. Don't trade your rent money. Before going to live trading and after you have funded your account, the most important thing to remember is your money is at risk. Therefore, avoid using money that could be needed for regular living expenses. You don't want to be trading with your rent money. It would be preferable to set a specific amount aside like you would do for vacation money. Have the same attitude toward trading. This will psychologically prepare you to accept small losses, which is key to managing your risk. Being able to accept small losses rather than constantly counting your equity will help you become more successful. But don't forget that your money shouldn't just be sitting there. It's there for the purpose of generating income. So take a deep breath and proceed with your investments. Profitable trading is hard. It takes time to learn. Learning how to trade is simple. Learning how to make money, on the other hand, requires experience. It can sometimes be a lonely effort. Very few actually understand the difficulties of trading, and trading slang does not exactly help either. Learn how to adapt. Spend most of your time developing an edge. This means real trades, not demo or paper trades. What you do on a paper is to document your plan. If it takes more than one sheet, it may prove difficult to follow. Simplicity is a key advantage. This will allow you to navigate through the complexity of the markets. Commit to one strategy, one edge. You can't trade everything. What is success? Success is high-quality work. If you continue to improve, people will start noticing you. More people will follow what you're doing, and they will associate your name with high-quality work because they know you have been able to prove that you're a high achiever. Soon you will have the opportunity to charge people that need your services as the work you put in now useful for their own. How is this related to trading though? The market will only appreciate your trades if you have properly identified the right instrument to trade. You have done your research, you have done technical analysis, and you are prepared for different scenarios, amongst other things. This is the quality work that a trader needs to put in order to get recognized and rewarded by the market. Thank you very much.